Hey guys, sorry, I'm not sure whether some of you were able to hear me out in when I was going to the Facebook Live a few minutes back. But then I thought of again taking you through this so that I can discuss on this and you are able to understand what I have to place across. But then I am facing some challenge in terms of when I'm looking in the other screen, the view of the screen is not coming. So just let me know, guys, if you're able to see my screen. Are you able to see my screen? Are you able to see the presentation which is there? Are you able to hear me out? You're able to see the you're able to see the screen, right? Sharvanu, just if you can just say that I'm able to see the PPT. Uh, I'm not able to understand whether you're able to see the screen and the PPT as well. That is what I'm trying to get a confirmation on. You're able to see the PPT, right? Okay, so then I think it's good to start. Okay, so guys, the topic on which I'm going to discuss on today is why we shall invest in stock market, right? So that's essentially the subject which I thought of speaking across, because many a times when I speak to many individuals, I get a sense that many of you are not clear as to whether we shall travel the road of stock markets or not, whether we shall start investing or not. Is investment a gamble, or is it that it's too much of risk, or why we shall at all get into the stock market? Why is it so that we shall at all get into the stock market, right? So, uh, Sarvanu, you are able to hear me clearly now? Just let me know if you are able to hear me clearly now. Akhilesh, Sarvanu, you are able to hear me clearly? Okay, great. So as I was mentioning that the topic of today's discussion is why we shall invest in stock market. Why it gets to be critical to invest in stock market, because I keep on, when I speak to many individuals, I get a sense that there is a sort of something which is not clear to them as to why one should travel the road of stock market. One is definitely we understand we can generate huge returns, but is it only the reason, or is it there is some sense we need to have to really give an understanding to us as when I say so, what I'm trying to say essentially is that if you have the reason as to why you should invest in the stock market, the why, if that why is clear, then the how gets clearer, right? How you go about what you need to do, how you need to go about uh, defining yourself in the stock market. That is something that can take a uh, step later at a later stage. But then the most important thing is why we should at all invest in the stock market, and that is what precisely I'm trying to speak over here on, right? So guys, as we understand, there are four essential human needs, right? One is peace of mind, second is health and energy, third is loving relationships, and fourth is financial freedom, right? Do you agree to this? Give me a yes, guys, if you are agreeable to this. Give me a yes on the chat box. If you have something more and beyond to this, that is also something which you can state in the chat box. Let's make it a bit interactive so that it gets interesting for me as well to place my words. Akhilesh, Sarvanu, I see only two of you, so I'll rest on you guys to respond. Anyways, in the meantime, you can respond. So I'll let me move forward. So as for me, there are four essential human needs, right? One is peace of mind, health and energy, loving relationships, and financial freedom. These are the four basic human needs one has. Now, we are discussing over here more in the context of financial freedom. Now, we can have financial freedom only when we can generate wealth, right? So that is something which we all understand. Now, to generate wealth, we need to invest a section of money that we are earning, right? So, as we understand, money is the raw material to generate wealth. Now, where exactly we can place those money? So, essentially, what we are trying to say, what are those asset classes where we can place the money? So, it may be in fixed deposits, in real estate, in government deposits, company deposits, stocks, mutual funds, bullion, or we can keep the money in cash itself, right? So if we are investing, and to every asset class, there is pros and cons to it, right? So when we are investing in fixed deposits, it is essentially there is no risk, it is liquid, and there is no entry cost involved. Whereas the cons is that there is low returns and it does not beat inflation. If we are investing that money in real estate, so there is high value that we may possibly generate that beats inflation definitely. But the cons is it's illiquid and the entry cost is quite high. On the other hand, if we invest this money in government deposits or company deposits, so there is no risk, it's liquid, low returns, does not beat inflation. That's the cons part of it. If we are investing in stocks, it is high return and liquid. The cons is it's of high risk. In case of mutual funds, it is high return and it is liquid. But the cons is that it's high risk and dependent on fund manager, and it also entails higher fees. In case of bullion, like gold, silver, and all, it is liquid and portable, but the cons is it's of low returns. And in case of cash, it's liquid and portable, but the cons is that there is no return or inflation risk is there, right? So these are few of the asset classes in which we may possibly place our money. Now, what does the rule of investment say? The rule of investment says that the returns you generate, when you subtract that with the inflation, uh, that difference should be greater than 15% per year. So that is how you generate wealth, you know. So if that's the case, and if we take say 7 to 8% as the inflation rate, then the returns has to be somewhere around 22% to 24% to generate that 15% per year uh, investment returns, right? So essentially, the net returns has to be 15% per year to get that wealth generated for yourself. So if that's the case, uh, then another thing that one has to keep in mind, that one also has to uh, uh, get into that asset class where the long-term taxes are less or nil, right? So that is also something that has to be taken into consideration. So we have read this rule of 72. Being a finance guy, I'm pretty sure you must have read that. As there we understand that after say if 8% is the inflation, then after every 9 years, because 72 by 8 equal to 9. So after every 9 years, the value of the same value gets depreciated by half every ninth year. So to give you an example, so say if 8% is the inflation per year, and we are taking a period of 25 years and we invest 10 lakh rupees in 2019, the value is going to be 5 lakh in 2028. In 2037, it's going to be 2.5 lakhs, and in 2044, it's going to be 1.3 lakh, right? Because there's 8% inflation per year, so every ninth year, it's going to get half every 9 years, I need to say, right? So now let's understand the four money equations. The first one is income plus loan is equal to your expense. So that is one equation that may probably take place. Or your income is equal to your expense, or income minus expense is equal to your saving, or income minus saving is equal to your expense, right? So the most important element out over here, which ideally is the should be the situation, is that income minus saving should be your expense, right? So in this context, if we understand this, so if we understand that this is the saving that we need to do, and for that we need to generate this much of return, right? Then there are two ways, and we understand why we need to go it into stock market, because it's liquid, and this is other. It is the only asset class where being liquid, we can get 24%. We can generate more than 20%, 22%, 24% of return going forward, right? Now, if we have understood that, now there are two ways to go about doing that. One is the short-term income, which we can do with intraday trading or swing trading, right? So where we need to have a target of generating 5 to 10% of the amount invested as returns in a month, and generally one use leverage for that, and also that the portfolio that you intend to create should be from 50% of the returns that you are getting generated out of this trading, and 50% from the from your own uh, means 50% of the portfolio shall come from the salary or the business returns that you are generating for yourself, right? And if it is a long-term wealth that you are trying to generate, then it must be in the form of an equity portfolio, which can be a mix of stocks, mutual funds, index funds, and so on. It shall be growing at 24% per year, right? Because we have discussed that. So these are the two ways, the short term and long term in the stock market, in which we can make this money. Now, let us understand the power of compounding. So if we are able to generate that return, right, that excess return, other than like over and beyond the inflation portion. So say if you are able to generate 4% per year, then it would take you 18 years to double that amount, right? Because we know the rule of 72, 72 by 4 equal to 18. So if you are generating 4% per year, then it gets to be 18 years to double the amount. If it is 6% per year, then it takes 12 years to double that amount. If it's 8% per year, it takes 9 years to double the amount. And if it is 15% a year, it takes 5 years to double the amount. If it is 24% per year, it takes 3 years to double that, right? So the more of a return you possibly generate, the faster you will be able to uh, double the money, right? So that's the power of compounding, and that's why Warren Buffett has said that it's the eighth wonder of the world, right? So say for example, if you're generating 8% per year return, so if it is 20 in 2019, we have invested 1 lakh. So by 2046, in say 25 years span, we are generating 8 lakh rupees, right? On the other hand, if you are able to generate say 18% per year, then that 1 lakh is going to give you a value of 1 crore in 2046. And if it is 24% per year, then it's going to give you a value of 9.6 crores for that 1 lakh that you invested for in 2019, right? So I think that gives you a sense as to why we shall be investing in the stock market, because it is one of those areas or asset class, I may say, that helps you to generate that level of wealth if you get a proper understanding as to uh, how you should be doing that. What are the tricks and trades, tips and tricks for generating that amount of returns, right? So I hope it gave you some sense as to why investing in the stock market gets to be absolutely critical if we are trying to generate wealth in the long term, right? So guys, I end it over here. Just let me know if you have any questions. I would love to answer that. Oh, Just let me know, guys, if you are able to, if you have any questions. I'm slowly getting accustomed with Facebook Live, and I'm pretty sure I'll do that. But in the meantime, if you have any questions, just let me know. And I'll be saving this in the chat box. So in the Facebook group, I need to say, and then post I end this Facebook Live, you can also place questions which are be eager to respond. Right?